peoples. I wanted to get the CONY situation out here front and center for everybody. So you see how poorly, in my opinion, the fund managers executed. It happens sometimes. I mean, I'll explain it. So let's jump in. So CONY closed at 23.66. A lot of trades, you know, they always have to close out the weeklies, put new weeklies on, and with the big loss they were forced to roll, as I said they would have to, their synthetic, which got some profits in. So let's cover it. So we were up 3.59% because the underlying coin was up 8.59. Well, the charts were indicating that it was very likely we were going to bounce. That 218, and then in the aftermarket, the 218 was the close on Thursday. So it would have cost them $3 or $4 to buy back that 222.5, which was the bulk of the weekly. But I kind of wondered why they didn't. Well, I think they take the route, they're just going to let the market dictate what the market dictates, right? And if they get a loss, then they're going to roll, you know, higher or whatever. So, but sometimes probabilities dictate that you take action when you get a chance to just about buy it back for what you paid for it, right? So on Friday, without getting into the further trades, what happened was, sure enough, it opened up right around 223, 222. So there was a slim opportunity for a minute or two where they could have bought that back. I was watching it. I think at around 350, 385. Okay, they could have bought all those contracts back. But let's look at what actually happened, right? So, by the way, I need to color code these a different color. Well, actually, I'm going to remove the color coding on these when I'm done, and only our new ones will be there, and they'll be fine, they'll be yellow. So it was 22,430, and had they bought them back at 3.5-ish, right, even 3.7, instead of 11.6, right? So let's see, I want you to see the math over here. So it cost them at 11.606, they had collected 6.9 million, and it cost them 26 million to buy that back, right? So you had a loss of 19 million, and had they executed, and this number been even 3.8, right? That difference was about 18 million, right? 1.5 up to the 19, okay, 17 and a half-ish. And what that means in your share, when I get over there, I'm going to go into that, right? So this was 11.606, right? I don't, whoops, got to execute myself better. Okay. There's back. Oh, it's, I tell you, I don't know why it's giving me fits, right? All right. So that, to me, now they can argue, well, what if it trended down? What if it, you know, went down? So that's just playing, that, to me, the skill is reading the charts and trying to anticipate, right? And they didn't. You know, no one can fault you if you just take something close to the 6.9 million, but to take a big loss, and to me the probability said that's where it was going. Okay, so what did that do? And I'm going to cover all the rolling the synthetics, but let's just jump over so I can explain it all to you, and then I'll back up and go through more detail. So we had about 90 cents here, right? Let me see if this is, because I just had this at a 2 cent. Something is not, I might have messed up something when I started changing it to show you. Let me look at the May tab. We should have like 500, Yeah, something is not right. Oh, I put it in the wrong place. That's why. 11.606. And this, I don't even remember the number. I think it was minus 310. Yeah, that's what it was. So that's what happens when I try to change things. I changed the wrong column here. Okay. So we got the 19 million loss. So now it'll be fixed over here in payments. Okay. So we went from having 91 cents of a payout to 2 cents. I mean, I had a feeling we were going to lose, but when we came back down to 218, 222, right, we had a chance to not lose a bunch, right? Because we had been back up in the 230s before. Now, the good news is the synthetic went way up, and by rolling, we were able to lower this. But we had an $80 million loss, right? This was up around $3 to $4. So we got this back, but it's still a loss. So there's really not money to borrow, right? And by the way, this counts the 6.6 million that we sold in new weekly calls that we need to capture. Thank goodness the fund managers went out and went to 250. Now we're trading at 237, right? We closed at 237, so they went to 250 and 252 on these contracts. Thank goodness that they did that, you know. See, because if they chased bigger dollar amounts, they could have gone 240 or 245. Then we probably would have, you know, we may lose on these, but at least they went out 6 and 5%, right? My gut says we'll be around 250. Now, the other good news, slightly good news, we only have 4 trading days, okay? I still own my coin, and I'm doing my own calls and buying back calls and writing new ones, you know. So I think I'm doing a better job than these guys are doing. But again, it's not their own money. They just try and execute, and they're kind of middle of the road, and sometimes they do really good and sometimes they don't. But I would have panicked, you know, personally. I'm like, buy it, buy it, buy it at the open. They didn't, right? Because if it would have gone down, somebody would have said, well, why'd you buy it at the open? You could have bought it, you know, you paid $4 or $3.80 on, you know, you spent 6 or 7 million. You could have just captured all that. Well, probabilities based on the chart and everything else and the way this has been trading and it was going to bounce is no. It was going to go back up closer to 230. It's exactly what it did. And when they wrote these, and by the way, they didn't even wait till the end of the day. So they bought it back at the end of the day. Let's see, 237. Yeah, this would have been around $15, but they would have gotten more money for these guys, right? So altogether, it was horrible. We even lost on the 430, right? Because we bought that for 4. It would have ended the day around 7. But I mean, it just, even though these are a small amount of contracts, it's just, they got killed, right? They spent 26.5 million on something that they collected 7 million. It happens sometimes, right? But for something that's a safety valve, it really can kill you on the other side. So enough rant on that. I personally, and I can't, until I get my Discord where we can talk among us, I don't want the comments out there read by people. So, I mean, me personally, I went out and I had 1,200 shares of CONY and I had 700 of Misty. And what I did 2 days ago, because I just didn't, I thought we were going to take a big hit here and be lucky to get $1, and I knew Misty could run because of the Mr. calls are up at 1830. And so I sold. I've never traded within my CONY for 4 or 5 months or in Misty, and I sold 1,000 of my CONY, and I bought, because the price is higher, like 1,000 or 700 of Misty, and I'll make an evaluation after payday. And the strategy was, I'm going to get paid 2 plus. I'm going to get paid 1 or less on the shares. So I just felt like for me, with that knowledge, it was worth it. But was I going to tell everybody here to do that in the video? Or, you know, say it in comments and have it out there in the public? And if I'm wrong, if people, oh, what an idiot you are. But, you know, I didn't think I was going to be wrong. I was still hoping that CONY for everybody else. I mean, I still got 200 shares for what it's worth, but I've got like 1,400 on Misty. So sometimes you can do that. Had there been another alternative, right? You know, because like somebody buying CONY, right? You can say, well, I can buy CONY when it's back lower, because at 218 and 222, you know that it's going to go back to the 230s, at least I do. So anyway, I'm ranting. I wanted to explain that. Let's go through the rest of the trade. So they put these on, they collected some more money, but again, where does that leave us, right? That leaves us, if we run past this, then we won't even have that. But here's a couple of good things. I don't think they'll run by it. I think they'll get up close to it. Okay? This is coming down, right? So it's not going to get to where it's going to pay anything. But right now, they've got 14 million in the positive because they rolled, right? I mean, we're lucky we took this down. So what they did was they went and got out of their 220s, because that's going to give them a bunch of cash, right? They were able to sell the, they buy the calls, so they sold the calls for this, right? And they bought the puts back, right? Because they had sold the puts. Well, that netted them like 44 million, right? And they only had to pay 7 million over here. So what that did was that made this really profitable by closing out the 220, because the price was trading up to like 237, right? I have to update so many different fields, but it's okay. So then they went into a 230, right? And that cost them, you know, they have to buy the call, because when they did this, it was probably trading around a little less than 230, right? Or right at it, and the calls cost more. So there was a 7 million delta, right, that they lost on that. And I got to make sure I added that in. I may not have added that in to the 50, but that doesn't really change, so I need to do that. But you don't care about that. It doesn't really affect the payout for right now. Yeah, so this one becomes a loss, right, of this. But the actual position on paper is setting at a 14 million profit. But what they did was they lost 7 million in this process, right? They had to spend this, and they only collected this. But as it moved up past the 230, we're setting on a paper profit. So I'll fix that over in my payments. That just means this will be up around 57 for the loss, right? Because I got to add a 320 or a 230 synthetic here. I probably could do that. While we're doing this. Sometimes it, yeah, okay, so it is. It's exactly. And it's so funny, because you try to do your spreadsheets and get ready for the video, and the reality, you see things and you're like, oh wait, now I got 3 synthetics figuring in this, right, added together. So the situation is, guys, let me go over the payments, and I'll go back and fill in the details, because this is what you care about. You know, we're only like, what, 11 days away or something, June 5th. 6 more days, yeah, 11 days away. So I'm thinking 75 cents to $1. We've never paid below $1. Maybe they get generous, right? There was 17 million carry forward, but 17 million carry forward is not on 22 million, is only about 60 something cents, right? I could do the math, equals this divided by this. Oh, it's 77 cents. Yeah. Okay. So that's what, but again, if they do that, okay, so we got 2 cents to pay in 77. If they consider that, then they got a loss over here, even though they got this 14 million paper gain, but they'll gain more if it keeps going up near 250 and they collect all the weeklies. You know, they got a decision, and honestly, with 11 days, this is so dicey. I mean, this could get back to $1.50, but we could collect these weeklies and then collect one more weeklies and get 6 million here, right? And then the 6 million on 22 is about 30 or 40, then they borrow a little bit. But right now, as it sets, they'll be lucky to get 75 cents, right? Because the fund manager likes to keep some money in reserves, right? But they do have the 17 million left, but they got a loss over here. So they're having to give that, and they're sort of using all their reserve, even though that loss has some paper gain sort of to offset it. I know, a lot of math. Okay. But I know you needed to know that. So here we are on the new weeklies, right? So exactly what happened in the chart. We went back to the scene of the crime. We bounced. We're almost right back up to the 240 line. So the fact that we're staying above this and consolidating says at some point, I mean, it could be a week, it could be 2, it could be 3 weeks, it could be 2 days. We're going to take off again, right? And my target is 300 to 350. It's just when, right? And that's going to be led by BTC. It's going to be led by the king of the cryptos, right? Even though these guys operate on their own because their earnings are out a little ways. So, and what's negative on this is right now on the weeklies, we're already behind the 8 ball. But again, why are we behind the 8 ball? Let's go look at holdings. Because we sold middle of the day, you know, maybe with an hour or two. I'm guessing we were around 232. So we got $3 something, right? And here, because we would have gotten 3.25. Well, as it moved up, it climbed, right? Because it's got 4 days left, right? Even though we're only at 237. So with 4 days left, when the market opens Tuesday because of the Memorial Day holiday, this is going to drop pretty fast. So if we don't go right up into the 240s, you know, this is going to start dropping down and we collect it. But so what? We're only at 2 cents profit for the month, right? And the same thing with this one. They sold this one at a lower price and it ran up. So right now, our 6.579 that we collected, we'd have to buy it back for 9.5. But again, do I think it's going to be 9.5? No. Because in order for it to be 9.5, we would have to be up around 257, 258. And if we did, this synthetic is going to blow up even more, right? But who wants to keep, if we hadn't had the big loss where they got killed on the synthetic, we wouldn't be in this situation where the weeklies become so critical. Now we're looking good at 230 by remaining over 230. So anyway, a long dissertation to get you that method. So again, in summary, they ate it here, right? They got killed. Poor execution, in my opinion. They did a decent job of going out further, and you had to look at 2 different synthetics, right? They closed this out, got a bunch more cash that took it down, but when they wrote the new 230, even though we have a 14 now paper profit as they traded up, that cost them money. But that's the necessary evils of working the synthetics. And that leaves us where we are, right? This is what I had calculated that they could have done, right? If they would have bought that around 3.8, then at $3.8, that would have saved them 81 cents. So we'd be looking at a gain of 83 instead of a gain of 2. So in my, in my estimation, the poor execution, so you can think of it like they could have, I saw it there, right? They could have bought that for 350 to 375 instead of 11.6. So that translates in to $8, right? I took $8 and I divided it by the shares and came up with the 81 cents. That's how that math worked. So that's the damage that was done just in that poor execution. But it happens. Overall, I think these fund managers do a good job. I don't want to just keep beating it up. But I moved my shares because I just didn't trust the execution. I see a pattern of them tending to just let it all play out on Friday afternoon and not trying to read the charts and be predictive, which sometimes it's a 75-80% probability what you see is going to happen. All right, guys, I went a long time on this. Let me see if there's anything else in holdings. So we're setting with this 14 million paper gain, which is positive. We see the negative. We closed at 23.66. So in some fairness, the marketplace isn't killing the NAV because they know overall we're doing okay. It's just they don't care as much about the payouts. We care. So I'll very likely, after the payout, I'll have to assess, is CONY a better deal, and take some of my capital and move it back in CONY. It's not like I'm anti-CONY at all. I was just anti-execution on where they were going to be. So I'll do my Misty over the weekend and get my Discord set up so I can advise better for people that are in the Discord. Okay, Bruce out. Again, this is not financial advice. I'm not a financial advisor. This is for fun and entertainment. See ya. Bye. Have a great holiday weekend.